Hi everyone! Today we're welcoming back our own Dr. Shane Oliver after a 2-month hiatus. He's been traveling a lot to Turkey, to Adelaide, everywhere really.
And to Brisbane, in fact, and the Gold Coast. So it's good to be back. Did you miss me?
Well, just a little bit. There's been plenty of things to keep me busy, especially with everything going around. Bitcoin, it plunged 20%, basically wiped out all of the gains this year. Markets have had quite a bit of volatility. And yesterday I was thinking this month marks a year since Donald Trump was re-elected.
That's
in
right.
Last year's election.
I sort of, when you get to that anniversary, you naturally think back. And I kind of thought, what was the point? What has he achieved? He's just annoyed a lot of countries that are probably laughing behind his back to some degree. The Chinese never made the phone call. He had to contact them, and all he seemed to have got out of them was an agreement to buy more soybeans. And they're probably thinking, well, he's killed off US aid, or great opportunity for us in other countries. We can go and help them out and give our own aid. He's put up walls against students coming to study in America with tighter visa requirements. Well, maybe China's thinking they can pick up some of those students. And on the trade front, I just sort of wonder what's been achieved out of all of this. And now we when I was away, we had the elections. Yeah, what is that? That's the.
I will say that this is the table of the year. This came out on Liberation Day, a nice spring day in April, on the lawn of the White House. Donald Trump came out with a new list of tariffs that the USA is charged from other countries. It was calculated by this ridiculous formula that doesn't make any sense. You wouldn't even need to know what that formula is.
We tried to work it out, but then we got too tangled up and concluded it was totally crazy.
Yeah, and based on that, he gave every single country a discounted tariff rate. With China, he gave a 34% tariff rate plus a 20% tariff rate to penalize them for sending fentanyl into the US. Europe got 20%, Japan 24%, Australia, pretty lucky, got only 10%, and Vietnam was charged with 46% tariff rates. So pretty crazy. So where have we gone since this day?
Well, that's what you sort of wonder. Americans are paying more because most of the evidence suggests that foreigners have not lowered their import prices coming into the US. You can get that from the data. So it's either US companies, the importers, paying at those higher rates, or it's US consumers, and it's probably a bit of a mix of both. We're not seeing a full-on flow-on to consumers, but you kind of wonder. When I was away, we had those elections in the US, I think early in November.
Yeah, some state elections, basically,
Virginia
special
and,
elections.
Mandaumi in New York, and or Zoran, I call him Zorro, maybe. I'm sure Trump would come up with a name. He now seems to like him. But anyway, it's a separate issue. But California and the Democrats actually did pretty well. Now Trump seems to be backpedaling. He's talking about tariff rebates. He's even talking about a $2,000 tariff rebate, which out of interest, if you do, will wipe out something like 80% of the revenue they're collecting from the tariffs, which won't be so good for the US budget deficit.
And he basically eliminated tariffs on a lot of consumer goods as well, things that he said the USA cannot manufacture or produce themselves, things like banana, cocoa,
and beef.
And beef and coffee beans. So basically, I think it really shows that, yes, we've gone through this roller coaster of tariffs, and tariffs have indeed gone up. I mean, it's above 10% on average now for all goods. But he did show that he's quite worried about his popularity and about the flow on to actual consumer price index. That's why he slashed tariffs on the things that people spend on the most day to day, things like energy and food.
So it's all about getting the cost of living back down after pushing it up. And I kind of think he was elected on the basis of annoyance that the Biden administration had been associated with a higher cost of living. There was hope that Trump would get it down. It actually went up. And that's why Americans then the swing voters swung back to the Democrats. And now he's backpedaling for the simple reason that next year is the midterm elections. And, of course, if the Republicans don't do so well, then he loses control of Congress and he'll become a lame duck president. So I think that's what all this is about. But I guess the good news is that it could mean that we've seen peak tariff.
Really? I mean, a lot of people argue that you haven't really seen that much of a flow on to inflation numbers just yet, because if you look at CPI, it's still right below 3%. It's hovering around 2.93%.
Yeah, because there was some delayed that they had the shutdown. It was nice to go on holidays and the US was in a shutdown because there wasn't much data.
So that's the other point of this Trump administration as well. There's definitely been an overhaul of the federal workforce. And last month you saw this longest shutdown ever in the US history.
And some of the data which wasn't released on payrolls will eventually show the impact of DOGE. Because don't forget, a lot of people went on an extended period, and then the final date for their cutoff would be, I think, September or October or something like that. And that data hasn't yet, the October data hasn't yet been released. So that data is still ahead potentially. But the thing on the inflation, I mean, I've seen rough calculations, and I think you discovered it somewhere, that the tariffs might have added 0.7%.
In the short term.
In the short term. But I guess the point is that, were it not for that, the core PCE in the US wouldn't be 2.8, 2.9. It would be 2.2 or 2 or something much lower, which, of course, brings us to the Fed.
Yeah.
So what's been happening at the Fed?
Well, there's been a lot of things that have been happening at the Fed. I think, again, going back to our theme of our podcast today. So what happened? Well, first of all, Donald Trump created another table listing the world's central bank rates. The USA back then was 4.5%. They've cut once more since then. But they still basically pretty high up on the list. Whereas here at the top,
that's the top of the range for the Fed rate.
Yeah. Whereas the bottom of the range, you have Switzerland at 0.25% or Cambodia at 0.45%. And he said that the US
it should be there.
It should be there. The US cash rate should be there. And then there's been definitely a lot of efforts from the Trump administration to basically shake up the board of governors at the Fed as well. The idea is that he wants a majority of Trump sympathizers at the board of governors so that there's more easing bias.
He's got one in there. He's got Stephen Mirren.
Yes.
Who's an ultra dove, and he's been arguing for 50
Waller
point
as well.
cuts. And he's got Waller, who he appointed, and that was in his last administration. Michelle Bowman, I think, is another one. He wanted to get rid of a governor called Lisa Cook, but that's gotten tangled up in the courts. So he hasn't quite got control yet.
But there's been now rumors about a new chair at the Fed overnight as well. So, I mean,
that might be announced soon.
I mean, I guess the direction is that, yes, the board of governors is probably going to turn into a more of an easing bias, but that probably would have happened with or without Trump, because if we look at it, a lot of the data in the US have turned quite weaker lately. So if you look at things like retail sales, you look at things like consumer sentiment, it has gone down quite a bit. And yes, we're basically in the dark in terms of payroll. But if you look at the trend, it has been consistently down in the past year or so. If you look at the private surveys, payrolls are not really increasing that much anymore. So basically very low hiring environment.
So what's your to borrow from Gavin Newsom, who I kind of like, what's your over-under on this? Do you think the US is going into recession or...
It is really hard to see the US going into a recession. I guess, a lot of people say that over the long term, it's hard to see the Fed letting that happen. It's hard to see fiscal policy letting that happen as well. Especially, again, we have this, one big beautiful bill starting to come into effect as well, with a lot of fiscal stimulus pumping into the economy. But it also does mean that the Fed probably would still cut rates. I think the Fed, the US won't go into a recession, but again, that's partly because the Fed will keep cutting rates.
But you've seen a whole bunch of Fed officials, presidents and some governors come out and say, well, we think we should hold, we're still worried about inflation, maybe we shouldn't cut in December, which was part of the reason for this dip in share markets that we've had from the highs in October. What do you make of that? What do you think they're doing? Do you think they're trying to push back against Trump, trying to take over the Fed, and they're saying, we don't want to do this, we're going to do what we think is right?
I mean, it is justified to not do anything when they're in the dark. And I think a lot of the reasons why they've been kind of, quite cautious about cutting rates is that they don't really have an updated reading of the US economy. Basically, now we won't have an October reading in terms of payrolls. We won't have an October reading in terms of inflation.
Yeah, they both come out after the December meeting.
And then there's doubt whether, those data are even accurate, because there's not much, people go at the BLS, at the Bureau of Labor Statistics, going out and collecting data.
But then there's other people at the Fed, obviously Governor Waller, Jefferson, I think the deputy Fed governor.
Yeah.
You've got Williams, who is the New York governor. Used to be said that all you've got to listen to is the governor, the deputy governor, and the New York Fed guy.
Yeah.
And Williams was sort of implying that, there is still a case to cut.
Yeah. I mean, it is true. I think a lot of analysts basically agree that Powell, so the Fed governor, still has a lot of sway over the board.
Yeah.
And I think, I mean, I don't think there's anything to indicate that he don't want to cut. I think there's still a higher chance of the Fed cutting in December. But if not, the Fed is still in an easing cycle. And I guess that's the point for next year as well. The U.S. share markets and economy probably gets a tiny bit of a tailwind from this easing
so
bias.
if we were recording this a week ago, the U.S. share market was in a downfall, and now it suddenly had a bit of a bounce. And part of it is that the Fed speakers have started to sound a little bit more dovish. And I think at some point last week it was down to 30-40% chance that the Fed would cut. This is the money market in December. Now it's back to around 82% when I looked at it this morning. And of course, we've had that NVIDIA results, which led to an initial rally, then a fall, so a bit of confusion around that. But you kind of wonder whether those concerns about a bubble are still there, but maybe with the Fed sounding more dovish again, that it sort of gets pushed into the background for a little bit, particularly given, usually from Thanksgiving Day onwards, shares are often a little bit stronger in the US. You get the so-called Santa rally into year end.
Yeah. Do you know why that happens? Why is there
Santa
always
comes and everyone
the
feels
seasonal
happy.
effect of positive shares returns?
Crop cycles. It actually existed in the UK share market before finance was such a big thing, and it was related to the crop cycle. That I think at the end through winter, so how's it that the crops would be reaped or
harvested.
Good word. That's the word now. Harvest. And the merchants had to get their money out of shares or wherever they had the money at the end of summer, end of European summer, Northern Hemisphere summer, to pay the farmers. And then, of course, eventually they'd sell it on, and then to the wholesalers and the mills to make the crops into stuff, flour and stuff. And then they would redeposit the money in the share market. So you get this sort of, as that money comes back into the markets over Christmas, it pushes share markets up. But anyway, the modern theory is that it's not so much crop cycles. I think that was just the ancient version of it. The modern theory is that it's due to tax loss selling in the US. So the US has a tax cycle that ends in September. Oftentimes investors in the US sell their losing stocks to reduce their capital gains tax bill ahead of the end of September, which can then give you weakness through August, September, and then into the end of the year they have to buy back into the market again. I think there's a few other overlays on top of that. One is you get a feel-good factor as you come into year-end, Santa, that's why that fits in. People get bonuses. There's a lack of capital raisings over the December, January period, so lack of new supply of stock into the market. So all of those things help give it this seasonal pattern. It's not foolproof though. The year that you rely on it totally maybe doesn't happen.
I guess to wrap this up though, so you're saying, it might look a little bit more positive from here. I mean, that's kind of my view as well. So that ties back to our first question. So what was the point of, the Trump administration doing this? There were a lot of doomsday sayers talking about like all these disastrous things that can happen when Trump was elected. But it seems like things are looking up now. Like
they're not too bad. I think what happened here, there's a good cartoon in The Economist magazine with Uncle Sam holding up the tariffs saying, I've got it. And actually, the weights are being held up by AI. So Trump, to some degree, has been rescued by the AI boom, which, of course, has led to a lot of optimism in the US to some degree around the share market, which has added to wealth and kept the US economy going to some degree. That's one take on it. And obviously, you don't want the AI boom to unwind. Obviously, going into next year, there's a lot of vulnerabilities.
There always are.
There always are. There's always worries out there. The midterms are normally more volatile for share markets. In fact, the average drawdown, top to bottom, this is not year start to year end, but top to bottom in the middle of the year, has been around 17-18%. So you can get more volatility next year. But anyway, providing the US economy avoids recession and interest rates come down, similar story in Australia, then I think we do okay. Anyway, one topic I wanted to quickly get on before we end this is housing affordability. The data shows a new low as house prices have gone to record highs and gone up much faster than people's incomes.
New low in unaffordability.
Or the ratio of house prices to incomes and those sorts of things, years to save for a deposit. assuming you're still saving for a 20% deposit and haven't got in with 95% debt. All those things have gone to a new level of deterioration.
It takes about 11 years if you want to save for a 20% deposit on average.
And the price to average earnings number, which I love because it's a simpler one and I've got a longer term data series for that, has gone from something like when I was born, I won't say that when that was, a long time ago, it was around 4 times. So if you could put all of your salary, after paying tax, all of your salary into a house, it would take you 4 years to get a house. Now it's 14 going on 15 times. That's horrible. And this is for a country that has land all over the place. And I know some people are thinking, oh, well, a lot of it's desert. Well, actually, no. If you even exclude...
There is so much land here.
There's so much good quality land in Australia.
I think so.
And we've jammed ourselves into a handful of capital cities and put walls around them, often national parks, which I think are great, and then put all sorts of regulations on. I mean, you produce a chart that I love, which shows the time to complete a dwelling these days has gone
up about 60% since pre-COVID.
That's ridiculous.
Yeah.
So what about the solutions, May?
Okay, how about I give you a few ideas and then you tell me if you think that works or not. First home buyer concessions.
Useless. They just put prices up.
Abolish negative gearing.
I'd put a cap on it because people sometimes take too much advantage of it and have 10 properties, so I'd limit the number of properties or the dollar value amount. But I reckon getting rid of it would just complicate things. It would just mean another distortion in our tax system, and I don't think that would make things better. And in fact, I think it would discourage investors and worsen supply.
I mean, there's this chart that's pretty interesting because the people who use negative gearing the most are actually dentists and surgeons in Australia. Basically, the people who pay the most income tax.
Yeah, they do. But there's also a lot of middle income earners in Australia who are property investors, like school teachers and ordinary Australians who do it.
Okay, next, cap the number of international students.
Look, I've got mixed views on that one. I know this is complicated. I think the level of immigration needs to come down.
Okay.
But I think you've got to be careful here because our 4th biggest export earner is education. And there are longer term issues around exporting coal and gas. And so we want to support our 4th biggest export earner. So my view is that we should have told universities 10 years ago you can have as many students as you want as long as you house them on campus. And don't forget, university student housing is different to regular units. But if you can't house them on campus, then they go into the regular housing market and push up rents, and that makes life difficult for ordinary Australians. So I don't think there should be a long-term cap, but I think in the short term, in the interest of getting immigration down, maybe we have to, but that's a short-term issue.
Yeah, I actually do agree. Okay, next one, vacant land tax. A lot of people talk about this, how, people are sitting on empty homes or just renting it out for Airbnb a few days a year.
Well, that sounds attractive, I know, if you're on the centre left. They love that sort of stuff. There's all these vacant properties around Australia. Let's tax vacant beds that are not being used. I think that would just discourage a lot of Australians and be a big, big negative. So I don't think that's a good idea. And I think often the amount of vacant, non-used space is exaggerated.
Okay. Next, the government building more public housing and social housing.
There's a role for that. I'm not sure the government necessarily has to do that, but they should make it easier to do, and maybe you need subsidies there. And social housing, by the way, is for people who can't afford to pay normal rents. You're not talking about people on good salaries like ambulance drivers or fireys or police drivers or tradies and what have you. That's where you need some affordable housing. This is for social housing, and there is a bit of a gap there. And maybe government can fill it, but maybe they should just make it easier for institutions like super funds to do it.
Oh, okay. Next one, getting super funds to build more homes.
Well, it's not their role to build homes. It might be their role to invest in them if they're attractive and that investment is in the best interest of their members, as per the legislation, then yes, but government just has to play a role there in making it easier for super funds to do that. Okay,
I'll give you 2 more. One is ban all foreign buyers purchasing homes in Australia.
Foreign buyers?
Yeah.
No, crazy. Totally crazy.
So banning them is crazy.
No, they're not the reason we have the problem. They're a very small portion of the market. Yeah. And guess what happened?
And they can only buy new homes anyway.
That's right. They actually invest in new housing. And if you ban it, then there'll be less new homes out there. Yeah. But the other aspect is that in the period 2020 to 2022, property prices in Australia surged by 29.9% or something like that. I think it was that. I checked it the other day. This is on the totality data.
Yeah.
And guess who wasn't a big factor? It wasn't foreigners, nor was it investors were actually also down and out around that period as well.
Building a fast train to orange.
Yes, we should do that. and more fast trains.
Yeah.
Because decentralisation is the key.
And then finally, I think, I guess building more homes, you would say yes to this, but how do we do that to end it up?
Well, I think firstly, you've got our cities and we've got to make it easier to put up more units in those cities. But I think this is a short-term solution. The reason I say the things we should do to make it easier, if we're going to release land, release it faster. Yeah. If we're going to rezone, do it faster. We've got to remove a lot of the regulation that's slowing down the completion of properties. We've got to fix up the shortage of tradies, train more tradies. We've got to recognise foreign accredited people. That mix of immigrants that come in, a bigger mix should be going into our construction industry. Yeah. But I reckon that's a short-term solution. I don't think Australia really wants to get as dense as Barcelona and Istanbul, where I just was.
Or New York City.
These are fantastic cities. They're really nice, but they're very dense living. That's not the Australian way. The Australian way is the quarter-acre block. We need to give Aussies the option to go down that path if they want to.
Maybe not in Sydney, though.
Well, that's where you've got to decentralise. Yeah. So, more units in the short term and transport hubs, which is what Victoria and New South Wales are starting to do. But I don't agree with the idea of putting up 3-storey plus units in any part of Australian capital cities, because that will destroy the very quality of our cities. The reason that Australians have come here, they watch neighbours, they see people in that beautiful cul-de-sac and they think, I want that. Lots of trees, beautiful neighbourhood. That's what they want. They don't want everyone living on top of everyone.
Okay.
So decentralisation, that's why, you need to have more people living in Orange and make it easy to build properties in Orange, address the tradie shortage, release land faster, blah, 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 all that sort of stuff.
Yeah.
I think we're finished.
Yeah,
I think we've got one more
to
go. This one's been very exciting, I think. Yeah. Is that right, Marcel? Very exciting?
Because I think Shane can go. You're supposed to say yes or no, but okay.
We know he's like, is that guy on Jimmy Kimmel Guama? The guy on the... I love that guy. Anyway.
Okay, I think we can leave it there. Yeah.
We'll see you next time.
Yeah, see you next time.
Mate. Thanks
Shane.